Hello, my name is Brian Dorr, and I'd like to talk to you today about RealAlt Investments. I'm going to give you a brief outline. Why should you invest? What is happening in the commercial real estate market? Is now the time to invest? I'm going to tell you a bit about RealAlt, and we also have a bunch of resources for you. I'm going to talk to you briefly about my career. The reason why this is important is when I started my career, I started in the early 90s, which was a severe real estate recession in Canada and the rest of the world. What that taught me was to look at deals that are broken, that needed fixing, and we learned how to fix them, and we learned how to make money out of them again. So it was a great experience. It taught me, it gave me the perfect foundation for what I'm doing today, and especially in these times. The other thing that's important is that I also, for the next 10 years after that, I also worked in the private industry. I was at MCAP, I was at Quest, I was at Infrastructure Ontario, and I was at Canada ICI. I was also Case Deployed Placement. But working at all these various institutions gave me an enormous contact list, as well as gave me a great foundation on how to look at real estate from many perspectives. And why do we start Dorr Capital? Dorr Capital started in 2011. The reason for our existence was there was a shortfall after 2008, the credit crisis. Banks had ratcheted back their exposure to each of our borrowers, especially in construction and development risk. So what used to be done at 75 to 80% and even 85%, they now ratcheted back to 65%. This opened up the alternative investment space, really. We started by brokering to different private institutions, and then that quickly evolved to loan servicing for these institutions. And then that led to other private investors, billionaires, major family offices saying, hey, we want to get on this as well. So we started syndicating loans to major groups, and that evolved into RealAlt. What we wanted to do was democratize RealAlt so that we can get smaller level investors, but also adjust the risk. So when we do syndicated loans, you get risk on one asset. So if something goes wrong with that asset, you could lose all of your money in that asset. Whereas if you do it through a fund level, you end up with a diversified risk set. You get a great average return. And what I noticed is that the return on my different high net worth types that were investing in all these syndicated mortgages, or even the institutions, their average return is probably extremely similar to what we're getting out of RealAlt. The only difference being is that they get idiosyncratic risk to that one asset, which is not great. So I think RealAlt solves that problem. I think RealAlt also gives you the benefit of these excellent alternative investments which are not available anywhere in the public markets. Let's talk about the current state of the Canadian economy and the environment we're in. We came out of a pandemic. We had a pandemic. We came out of the pandemic with a lot of inflation. Now we're fighting that inflation. Interest rates went up to historic highs on a percentage basis. I think it was over 200%. So we're now seeing that period of time has ended, and we're slowly getting a decrease in interest rates. So this is the exact time that we need to invest. The fundamentals in the Canadian economy that we always have had, and we were always trying to solve, is we're undersupplied in housing. We're undersupplied in residential space, whether it be rental or ownership or condo. It hasn't changed. Canada's still growing. We have an aging workforce that needs to be replaced. So these are things that are pushing the housing supply down. So we're in an undersupplied market. It doesn't appear to be that way at the moment because we're in a bit of a pause, but now is the time. So if you're feeling fearful about the market, really what you should do is this is your time to invest. So we're going to talk about why you should invest. And the timing, as I just said, couldn't be better, because we know we've troughed out. We can't figure out what the bottom is, but I'm telling you, if you continuously invest, you will be experiencing nothing but upside risk from here on. let's talk about what RealAlt invests in, what we've traditionally invested in, and what we will continue to invest in, and all the other things we invest in. So one of our main products is investing in land. Then what we'd like to do is evolve that land loan into a construction and development loan. So you can actually see both in this picture, where you see a piece of land, and then we service it, and then we evolve that into a construction loan. We actually build the end houses, and then we pay off the loan through the housing. So we start as a land loan, then we move to B piece or mezzanine piece into the spring, which gives us an enhanced yield, and we move through the product life cycle by selling off the individual units. It gives us a good long-term repeatable product, excellent investment. We're also looking at investing in, and as a result of changes in our legislation, small rental product. This is a good fit for our fund as well. We can do small loans, call it 2 million, 3 million, 4 million as first mortgages. In this particular case, we're getting a yield of 11.7%. That's dynamite for a first mortgage. The takeouts on these loans are either regular commercial loan, commercial mortgage, or CMHC. What the beauty of this is that anything that's 5 or more units actually is eligible for the CMHC commercial product, or MLI Select, or any of these programs that the government has going on. MLI Select is like a 50-year amortization, so we would have very little equity in the deal. So amazing opportunity. We're definitely going to go after this. We love it. So my next slide is about a property that's located, and this is a good location, Central Toronto. This is Bathurst and Eglinton. It's a condominium project. It's an example of a second mortgage product on that is self-liquidating. So what that means is there's enough pre-sales in the condo that when they go to, after they finish completing the units and they start discharging the mortgage, there will actually be enough money to pay us back through the existing sales. The yield here was 15%. That's an amazing return. Pre-sold product. Project is delivering beautifully. It's an amazing luxury product in a great neighborhood. And here's another project. This is a land bridge loan that we're trying to. That's a typical product for us as well. Land bridge loan, which is going to end up being a rental building, which is going to have a CMHC takeout. No matter which way I look at this, I love this because we're getting 10.92% yield on this. However, first mortgage, so we're in the driver's seat. Something goes wrong, no problem. I'll happily partner with a developer, keep going, or this developer, keep going to build it out conventionally, then get CMHC insured takeout. But this is likely just going to be a bridge loan. That's the way it's planned, and we're fine with that. We like churn on our book, and we like getting these yields. So these are typical products. So when we roll all these products together, in our $18.3 million of assets under management, we end up with a very attractive risk-adjusted yield of 10.7%. We pay this monthly. You can get access to this for a minimum investment of $10,000. TFSA, RSP eligible, and back to the risk-adjusted return, where average loan-to-value is 60%. So this is an excellent return for a 60% average yield in today's market. These are all values adjusted today. If you look at our split between first and second mortgages, 87% first, 13% seconds. Again, nice ratio, manageable. Land versus construction, as we said, we're land focused, so we have 93.7. So we would like to give you a special offer. We are offering on a $10,000 investment for your first $10,000, you'll get $1,000 worth of units for free. That is like another additional automatic 10% yield on top of what we're already yielding. So this is a fantastic offer. It's real. We will really do this. Please invest. This makes sense. The other advice we have for you, and we encourage, is stay educated. We've created a number of resources at Door Capital. We have over 25 blogs. We're on social media. We have a quiz of what type of investor you are. We are about to launch a YouTube channel. The YouTube channel is going to teach us things like how to invest in small rental buildings and how we underwrite. So please stay tuned. Please look into our resources. It will help you no matter what you're investing in. So we encourage you, please subscribe. And we're going to end with a few statistics, which you can read on your own. I'm not going to bore you with it. And I'd like to thank all of you for your time and energy and for listening to what we have to offer. And I look forward to investing with you.